Whew. Grand Rising traders. It is 6:43 in the AM on this beautiful Tuesday. And what happened? Well, yesterday, like I explained, if we weren't able to break through the consolidation line slash 38.2 resistance level and the 50% resistant level, if it didn't hold, that we would come back down, retest the consolidation line down here, which we did in the last hour. And now we're apparently getting a bounce off of that momentum. However, the impulse MACD tells us that no, that's not happening. Momentum is going in the wrong direction. We are getting some resistance at that 50% level. So we're going to have to break that. Right now, the floor is the consolidation line, and the ceiling is attempting to be that 50% retracement level. We're going to have to go back up there and pass that level, get back into the Fibonacci channel that we were in yesterday, and reattempt to break the old consolidation line, which, by the way, is a very powerful line. It goes back quite far. I'll show you here. And as you can see, it's acted as support multiple times, but for the most part, it's acted as resistance as we've been underneath it. And when we do break it, it's hard for us to maintain the level above the 65K trigger point here. We get above it, and then this consolidation line up here stops us, and we're forced to go back down. Even when we go back further, we see the same thing. So I went back far enough to where this consolidation line was passed. And how far did we have to go back to do that? Yeah, we had to go back to Friday, April 12th, for us to be above the 65K. So it was back April 12th, a little over a month ago, that we were above 65K. We haven't been above it since. And every time we get near it, we get smacked down. And of course, these two old consolidation lines here are stopping us from getting to the 70K. So we have a battle in front of us, guys. Not an easy road at all. Those consolidation lines, I guarantee you, will come back into play in the future once we get past the 65K trigger point here, which looks like we're going to be doing some more sideways motion in the larger extreme channel, which would be 5K from 60 to 65K trigger point. That's the larger extreme channel, and we're going to travel through that. We've been traveling through it for a bit here. Okay, we entered it back here on Friday, May 3rd, and we really haven't been outside of the 60-65K range, except for right here where we peaked it. We haven't been back below 60K. So in the wide range, the wide channel, it's 5K channel. In the much narrower, smaller channel, it's in between two consolidation points, this old one right here and the newer one that was formed the other day right here. It's bouncing between those. Once it left the consolidation box, came up, hit the old consolidation line, and The newer consolidation line is currently acting as support, keeping us afloat in that more narrow range. We narrow it down even further, it becomes us stuck in a Fibonacci level between the 50% and the 61.8% is where we are right now. With the consolidation line blocking us from getting down to the 61.8% line. So, not really good, not really bad. Kind of a mediocre position. That's where we're going to be, I would imagine, for at least another week, maybe two. I was starting to get the feeling, because I've said for a while that history won't be reliable because of the ETFs. I may have been wrong on that. History may still play out, and the ETFs may actually enhance the historical move. Part of the reason why I'm changing my mind is because of this long, prolonged sideways movement. After the last halving, what happened was we didn't see a major surge until after summer. So if history is going to repeat the last one, then we won't see a major surge until after the summer. So again, I reiterate, I most likely, I won't say most likely, I may have been wrong about historically not being able to rely on any historical data. Could possibly be wrong on that. Have to reiterate that. Don't want to put out anything false. Want to make sure that that's correct. So what we're going to have to do is we're going to have to wait and see how the market plays out to see if that's actually a correct or incorrect statement. If the surge happens after the summer, then history is still playing out, and we'll see the major surge probably around last time I think it was November, maybe October, November. So that's when the major surge will come if history is still playing the way it has played in the past. We will see some movement like right after the summer as well, if history is still going the way it's gone in the past. I don't know. Like I said, if you had asked me a week ago, I would have said, no, history is no longer reliable. But because of this long drawn out sideways movement, history may still be in effect. We'll just have to see. So that's going to be my time for today, guys. I will see you tomorrow. This is the Dark Sage signing out. As always, you guys have a blessed day and peace.